IFGL Refractories is involved in manufacturing special refractories for the steel industry. With manufacturing plants across India, America, Europe, and China, IFGL would be able to report higher volume growth going ahead. Consolidated revenue grew 28% year-on-year thanks to increase in demand for refractories, improvement in realization driven by better product mix, and depreciating rupee. IFGL was also able to increase the prices of refractories on the back of higher raw material prices. IFGL sources much of its raw material requirement from China. Due to shortage of containers, ocean freight rates were very high, which led to increase in cost. Ocean freight rates have gone up significantly from about $400 to $500 per ton to nearly $2,000 to $2,500 per ton in the last 6 to 8 months. EBITDA, meanwhile, increased 130%, aided by higher revenue, increase in gross profit, and tight control over employee and other expenses, leading to much better operating leverage. According to the recent amendments by the Income Tax Act, goodwill on amalgamation will not be considered as depreciable asset, and depreciation on goodwill will not be allowed as deductible expenditure effective 1st April 2020. Accordingly, goodwill of 267 crores that appeared on 1st April 2016 is being amortized over a period of 10 years. Unamortized value of the said goodwill is 133.5 crores as on 1st April 2021 and is being restructured to be written off against securities premium outstanding as on that date. This restructuring will lead to fair representation of assets and liabilities. IFGL had approached NCLT with this proposal and expects that within the next 6 to 9 months, it should get the judgment. IFGL has cash and cash equivalents of 322 crores on consolidated basis as of FY21 versus 204 crores in FY20. Operating cash flow to EBITDA was at a healthy 90% for FY20 on a consolidated basis. IFGL has freehold land of about 10 acres in Visakhapatnam for manufacturing products like monolithic and precast shapes. Phase 1 is expected to be complete and commercialized by end of June 21 quarter. Phase 1 has capacity for manufacturing about 48,000 tons per annum and will cost 30 crores. Phase 2 expansion is likely to be complete by June 22. Greenfield Capex has a fixed asset turnover of around 3x to 4x. After completing Phase 1 Capex in Kandla in March 20, Phase 2 is likely to be completed by September-October of 2021. Brownfield Capex has a fixed asset turnover of around 6 to 7x. Maintenance and debottlenecking Capex for FY22 is planned at 10 crore rupees, and IFGL plans to complete the Capex through internal accruals. Overseas subsidiaries witnessed a sharp improvement during FY21. US and Europe markets continue to witness good demand for the products on the back of improving steel production in these regions. Improvement in performance in FY22 will also be on the back of low base of FY21, as a couple of quarters in FY21 were impacted due to lockdowns. In the US subsidiaries, IFGL received $1 million grant from the government under the People Protection Plan, which led to higher profitability. In the German subsidiary, IFGL controlled cost, focused on high-margin products, and received some government grant as well. IFGL is a proxy play for the increased production of steel, which is likely to be seen in FY22 and FY23. Each ton of steel requires around 10 to 15 kgs of refractory, and IFGL mainly supplies its refractory to the steel producers. Currently, IFGL is operating at a capacity utilization of 75 to 80%, and with new capacity coming on stream from Kandla and Visakhapatnam, IFGL will be in a position to increase its market share. Large steel producers like SAIL, Tata BSL, JSW Steel, ArcelorMittal are some of its prominent customers. Some of these players will be increasing capacity of manufacturing steel in the next 3 years, which will directly benefit IFGL. April-May 21 saw steel production growth of 20% year-on-year, while steel production in India grew 97% year-on-year during the same period. According to the World Steel Association, steel demand in India is expected to rebound by 20% in CY21 after witnessing a decline of 14% in 2020. We expect revenue growth of 10% for FY21 and 12% for FY22. IFGL is trading at a PE multiple of 14x for FY22 and 11x for FY23 projected earnings. investors can accumulate the stock and add on decline. Do remember we had also recommended IFGL back in April 21. The risk to our assumption, however, is lower steel production compared to expectation and an inability to pass on increased raw material costs due to higher competition.